Good afternoon, traders. So let's take a look at these charts, see what we got going on here. All right, so as we can see from this morning, we did get that good old rejection and retracement from this 61.80 major structure area that we were looking at. And let's see how many pips that went down for. So, all right, so from the wick, from the top of the wick, we got to draw down to roughly what, 60 something pips. So 60 something pips, not bad at all. I will tell you, I got about 50 pips out of that one myself. So once I did get the confirmation from the lower time frames that this is what was happening, I did put an order in to the downside, and I took it for about 50 pips. My take profit, I set at right around 50 pips or so, and was able to get out of the market with a good chunk of change for the day. So for the most part, the way I trade, once I get a good one, that one that I'm looking for, I'm pretty much done for the day unless I really see something that stands out. That's a no-brainer, so to speak. Then I may get back in the market, and put something in that's going to be beneficial to my piggy bank here. So I would encourage you all to just kind of, again, be patient. These main levels typically hold up pretty good. So you can, again, look for the signs and signals on the lower time frames. Remember, we're not entering necessarily off of the 1 hour time frame. We're looking at the lower time frames for our entries for the most part. So because, again, we look at the lower time frames for entry signals and stuff because they take lesser time. The candles and formations take less time to develop than, let's say, waiting on a 1 hour candle to do so. And by the time you wait on that 1 hour candle to give you this signal right here, you've pretty much missed half of the movement if you're waiting for this 1 hour candle to close. It just takes longer to develop. You still could have got in once you got that that 1 hour candle closed there, to the downside for a good bearish move, and then followed it down. But again, looking at what's going on the hour time frame, again, you're seeing some stuff happening, but you want to verify it on the lower time frames, and this is where we look to take our entry and exit points. So with that being said, let's take a look and see what's going on. So if I put a fib, this swing high, let's see, no. We're going to do it from this swing high to this swing low. Let's see what area we're sitting at right there where it's looking to retrace. All right, we got the most recent swing high to the most recent swing low, and some could say we'd go the other way, which we could. All right, so let me take this daily time frame fib off real quick just for the benefit of what we're trying to do here. All right, I'm gonna take this one off because I want you guys to see exactly what's going on. All right, we're on a 15-minute chart. All right, so looking at this minor structure fib right here, all right, we see that, all right, we had this down move, right? It retraced, right, off the 100% right there, and then basically we did a pullback, right, to this area right here. Again, that 61.80, that golden ratio, a big area for our pullback entries or retracements, however you want to look at them, however you want to call it. So if you were trading off the 15-minute chart, you look at the 5-minute chart for your confirmation. Once you start seeing some reaction to that 61.80 area, you look, get your confirmation to get into a trade to the downside. But again, at the end of the day, that wasn't, honestly, in my opinion, wasn't a lot of pips necessarily, but just learning getting the experience and learning what you're looking for is very important. This 61.8 area, whether you're on the higher time frames, major structure, or minor structure, can be applied for some entries. Again, I like to follow the major structure because that's where your biggest moves are coming from. That's where you're going to get those big pip moves. So I typically don't necessarily look to trade the 15-minute chart and below, but I do look at the lower time frames for my entries. So as we verified that, let's go ahead and take this fib off. All right, so I'm going to remove that fib. I want to check something out just out of curiosity. Let's see. So if I put a fib on this one from here to here, you know, we see we got that area right there where it retraced. It didn't quite make it to the 78.60 or what have you, but it did start reacting once it crossed over into this area right here and did retrace back. So we'll take that off. Again, it seems to hold up pretty good, but we never get into the market without doing our verifications and everything. So let's go back to the daily. All right, then we're gonna put our fib on there. We'll put our fib from the swing low to the swing high. All right, and this is pretty much what we're tracking. See, we got that retracement and everything going on from there. So not bad. We can follow this down to the lower time frames to get a better look at what's going on. And this is where the market is right now, trading in between this range right here. And this is roughly a 50 pip or so range if you do the calculations. But again, knowing what you're looking for, how to react when you get them verifications and things like that. And then again, like I said, not waiting on the development on the hour time frame. We're looking at the lower time frames for our signals, entry points, and things like that. So I hope this was helpful. I may put something out a little bit later on today to kind of see how the market developed throughout the day, so that we can see if there's any indicators of what we may be looking at for tomorrow and so on. So good trading.